Tuesday afternoon by now. So how's everyone is doing today? Great, great. Good afternoon, everyone. We're going to start the session in about 2 minutes. Sorry that we are a little late. Is that because we do multiple sessions on the date, during the date at Elliott Wave forecast, and we were finishing the other session. Then it takes a little bit to switch and everything. So good afternoon, everyone. Fantastic, guys. I'm doing great. It's going to be a very interesting seminar. And I hope that you guys at the end are able to see the market the way I do see the market. That's the goal, right? That is the goal. Right? No, I haven't showed the screen. Let me start sharing the screen. Good morning, Benjamin, Dragon, Diego, Nicola. How you doing, Nicola? If it's the same Nicolas that I know. So how's everyone is doing? All right, guys. So let's start the session. My name is Eric, Eric Morera. I'm the founder of Elliott Wave for Gas. And we're going to take this opportunity on an April the 21st. That's great, Nicholas. April the 21st of 2026 to go over something that is a huge debate across the market. What roots the market? The technical, the technical or the fundamental trading. Many traders wants to do both, and I have an opinion. It's my own personal opinion. It's been my opinions for over 20 years. Is that you cannot be both, in my opinion, because something that I have learned in trading over the years is that you have to have a set of rules, and that you need to avoid noise, right? Enough with the noise that the Elliott wave theory brings to you. That's more than a noise, right? Enough with that noise to be adding more noise, right? So the seminar is going to last about an hour and a half. The rules are very simple. I'm going to do the presentations, and the presentation is going to go by sessions, right? And after each session, I'm going to be asking you guys, you can ask questions. The thing is that I cannot be answering questions to you guys uh, at the same time that I'm talking. Otherwise, I get distracted. All right. So those are the rules. Again, my goal is to help you guys to understand the market with a different point of view that most for sure that the one that you guys use on your daily operation as a trader, right? So having said that, let's start the seminar. And what we're gonna be covering is, and I hope you guys understand, this seminar was programmed in our calendar before the current reaction of the indices. And that's why you guys see the future part of the World Indices. Because we are not covering gold, silver, and oil. I just put the rule, Benjamin. Please follow the rules, right? And eventually, we got the schedule, the seminar before the current reaction and the indices. But the current reaction is only proof us right, right? That's what the name is, the future path of the World Indices and the world, right? So in this webinar, we're going to be looking at the World Indices. We will do using a stocks indices to explain the most likable path going forward and the possible detours that the market can take. We're covering the Elliott Wave cycles, the Elliott Wave structures, the 5 waves, ABC, NEST, among others, the World Indices, when we were before the war, why we were expecting the pullback, and where we right now, and what we are what is coming next, and the reason behind our views, right? That's what we're covering, and what we're gonna cover for the next hour and a half, right? Now, these are the Elliott Wave degrees. I'm gonna cover the basis because you guys need to do understand the basis. Otherwise, you guys will not be able to forecast using Elliott Wave, right? You need to understand the basis, right? So the market should divide in cycles. And I gotta be honest with you guys. I started Elliott Wave forecast from the scratch in 2005. And the way that Elliott Wave forecast is presented now started in 2009. Time fly, Nicholas, right? The time fly. And the way we see it at the beginning, we were pure Elliott Wave guys. At the beginning, I get deep into every single 5-minute chart, trying to justify everything, right? Trying to justify everything in spending hours looking at the 1-minute chart, spending hours, the 1-minute chart, the 5-minute charts, and on and off. But anyways, nowadays, we have changed. Nowadays, what we do is we follow a more complex, but at the same time, system. Yeah, Elliott Wave is part of the system, but I use the word part of the system. We use cycles, pivots, proprietary system to determine when a cycle has ended. We use Elliott Wave. We use sequences. We use sequences. We use correlations. We use high frequencies and a lot of things to come out with the forecast, right? And we put it all together. So, anyways, the Elliott Wave cycles, in my opinion, we use it as a language. In other words, that with the Elliott Waves, you will able to identify the degrees, and we can forecast and we can get back to members and tell members the following, right? For example, this is the side from inside, right? In the newest version, this is the side, and we go into the side, right? You go to the side, and you want to see the chart of the S&P, right? You go here, you see the charts, you click on it, group 1, you look at the S&P right here, you click on it, and you're going to see the weekly chart of the S&P. And these are the degrees, right? You got the red, the black, and the blue. And within the black, because the red, the blue is less a degree than the black, you're going to see the 5 weeks on the blue, right? That makes one black. So that is technically the Elliott Wave degrees. That is the grand super cycle, it is the super cycle, it is the cycle degrees, the primary, intermediate, the minor, the minute, the sub-minute, and things of that nature, right? So the degrees is a way that I can explain to you guys, this is where we are. And the way that is used, you can see it here. The way that is used can be seen here in this chart of the S&P on this degree, like it goes. This is the weekly. On the weekly, this is the red degree. The red degree is this degree, the minor degree. But the intermediate, you got here, and you see how you can see it, that is the blue. And that is how we use the degrees. So the market is flatter, right? The market repeats itself. And using the cycles, using the degrees, I can tell members that this is where we are. And this is where the degree that is ending. Now, does everyone understand the degrees? Yes or no? I don't want you guys to become expert. I just want to understand that the degrees is a way to communicate where we stand in the cycles. Now, also, we're gonna hope you guys, before we explain what we're gonna explain, I want you guys to understand what is the Elliott Wave structure. And the Elliott Wave structure, the popular is it moves in sequences of 5. It's 5, 9, 13, right? 19, 13, 98, 13, 17, 21, 25, and on and on and on, right? So a 5 weeks is like this. 1, 2, wave 2 cannot pass the beginning of wave 3 or wave 1. Wave 3 cannot be the shortest. Wave 4 in a regular impulse cannot overlap wave 1, and wave 5 is right here. It lacks momentum with wave 3 in a regular impulse. So it's 1, 2, 3, 4, and a 5. That's an impulse in the Elliott Wave theory. Now, there is variation, right? For example, in a leading diagonal, wave 4 can overlap wave 5, wave 1 in a leading diagonal, right? Sometimes wave 3 is not the longest wave. Sometimes there are extensions in which wave 3 is the extended. Good morning, good afternoon, Pedro. Wave 3 can be right here, the extended. Wave 1 can be the extended. Wave 5 can be the extended. 70% of the time, wave 3 is the extended. But the hard rule is that wave 3 cannot be the shortest. And I want you guys to remember, wave 3 cannot be the shortest, because we're gonna cover today, and we're gonna present a sample in which wave 3 is the shortest. Wave 3 is the shortest. We're gonna explain today cases in which wave 3 is the shortest. And that cannot be happening, cannot happen in the Elliott Wave theory. I mentioned earlier that the idea that we use a lot of correlation. We use a lot of correlations when it comes to forecasting the market, right? We use a lot of correlation. And today, when we're gonna cover the context, we're gonna explain the wide understanding that the wave 3 can never be the shortest is key in forecasting, right? So that's how the 5-way looks, and this is how the extension looks. We also gonna cover, this is the third way extension, and the third way extension easily can be seen. 1, 2, 1, 2, 1, 2. This is a triple nest. What is a nest? It's a series of 1, 2, 1, 2, 1, 2 before the extension of the wave 3 explode. It's tricky. It's tricky. In a good way, it's tricky. Most of the retail traders, what do? Most of the retail traders, when they see the market sitting here, how many ways do you guys see, honestly, from here up to here? How many ways do you guys see? In Elliott Wave, Pedro say 5, Nicola say 5, Dragon say 5, Benjamin say 5. Happy to have you here, Christopher. Right? You see how good it is now, Christopher? There is 5 ways from here up to here. No, it's not finished yet. 5 from here up to here. Right? Now, the Elliott Wave theory say that after 5 weeks, it should happen 3, right? That's what the theory say. And the truth of the matter is that it's true, right? Everyone, the theory say that after 5 weeks, 1, 2, 3, 4, 5, it comes 3. But this is the killer, that many waivers and many traders, the waivers, they believe it is the same everywhere. The Elliott Wave, our system can be applied in every market. Indices, commodities is the same. So many waivers believe that because the Elliott Wave theory say, but which is true, that after 5 weeks, it's gonna come 3 weeks back. What do you think waivers and professional waivers gonna do? They're gonna start calling the market to crash. They're gonna start selling. They're gonna become all of a sudden bearish, because the theory say that after 5 weeks comes 3. Yes or no? Everyone there, AJ, Benjamin, Chris, Adrian, D, everyone, Nicholas. That's what people does. And people goes and start fading the market. And that's the killer. That is the killer. Because even though from here up to here, there are 5 weights, even though right there are 5 weeks, that doesn't mean that you gonna be selling the market, because a waiver without correlation is a dead fish in the water. Many professional traders, Nicola's been trading, I know Nicola's at least for easily 13, 14 years. He's been around. And many professional traders, 17 to be exact, many professional traders, they love fading the indices, and they love calling the crash in the indices because they see 5 weeks and the market proved them wrong, right? So the next is the next topic. And what is the next? 1, 2, 1, 2, 1, 2. And the next takes only few people understand what a nest is all about, Nicola. And only few people have the courage and the knowledge to call a nest when the market is showing the nest. Because most people got it wrong. Most people got it wrong. Right? Right? Most people do not understand the concept. Right? Now, everyone understand now what is the 5 weeks. Everyone understand what is a nest. 1, 2, 1, 2, 1, 2. Right? Everyone understand now. Exactly, Diego. Exactly. The question for Diego is, so the nesting is what makes the finite 13. Of course. Because in the nest, you have, in the degree we cycle, you got 1, 2, 3, 4, 5. But if you go and you count the internos, I repeat, the market is flatter. It's flatter, right? So you go over here and you look at it and you say 1, 2, 3, 4, 5. It makes 2, 6, 7, 8, 9, 10, and 11. It makes 12, 13, 14, 15, 16, and 17. When the wave 3 is extended, wave 5 finish in 17. Now, Nicola has been trading. Guys, don't keep asking me questions not relating to what I say. Keep those questions to the end. I will answer all at the end. Otherwise, I cannot continue. So, Nicola has been trading for years. How many persons, Nicolas, have you known that it counts the swing on 5, 9, 13, 17, 21, 25, 29? Not too many waivers does that. We developed that. We call it that way. We call it that way. And we made famous, right? We made famous the 3, 7, and 11, right? And that's the market nature. And we have developed this theory to another level that few do not understand. Now, I got a question about what I cover. There is any instant, right? Is any instant. If you don't see it, Igor, it's because your internet. This is my mouse. Everyone see my mouse. Wave 4 can overlap wave 1 in a leading diagonal. Yes, it can overlap. So everyone understand the 5 weeks, everyone understand the extension, and also everyone understand what is a nest, correct? Yes or no, guys? Not to the expert level, is to the levels in which you can kind of understand the thinking on my language when I start talking. So this is an ABC. What is an ABC? Is a correction, a correction, a correction, in which a correction that it happened against the main trend, and it is 1, 2, 3, 4, 5 makes A, 3 backs make B, and B is an ABC, or it's a correct structure himself. A is an impulse, and C is an impulse. From here up to here, there is 3 waves. No 4, no 5, no 6. 3 waves. Corrections, runs in 3, 7, and 11. Correction comes in 3, 7, and 11. That's an Elliott Wave sequence, AG. No up and down, an Elliott Wave sequence. The trend always is in 5, 9, 13, 17, 21. The corrections 3, 7, 11, 15, 19. So an ABC is 3 waves, 5, 3, and 5. And always happen against the main trend. Right? Everyone? Always happen in 3, 7, and 11, and always against the trend. Correction, yes. They follow channels. Yes. Now, everyone understand the ABC, right? Everyone understand the ABC. Now, let's keep going. Now, and I want to show you guys an example of a nest in real life. For that, let me go and show you silver. Silver made a tremendous move last year, right? And early this year. You go over here. This is silver to members last year. Look at the date. April 5th of 2025. What we were calling 1, 2, 1, 2. Right? 1, 2, and 2. I don't know why. Maybe if you guys see the mouse correctly, right? Maybe GoToMeeting is lagging a little bit, or I'm going too fast. So this is a nest in silver. 1, 2, 1, 2. In the blue and in the red degree. Now, if you look at silver here, look at silver. How silver went over here and react higher. But it reached the blue box and react higher. And now silver, you look at the real chart of silver and look, it went for a nest on the weekly. It went for the nest on the weekly to now a nest on the grand super cycle. like this. But what is lag increase? Is the mouse or it is a the the recording of the live session or the charge? And good? All right. So now we're calling another nest in silver, right? You see the nest previously called right here, 1, 2, 1, 2. And look at it, the explosion to the outside. But we were calling that ahead of wave 3. A recipe of a good waiver, a recipe of a good waiver is nothing more than anticipate the market, right? Anticipate the market. A good waiver cash 90% of wave 3. A bad waiver chase the market, right? That's something that I hope you guys understand, right? Now, got a question. How can you identify what is the difference between high and a nest? It's two different concepts. A nest is to fight. A nest, first, you need to have two sets of 5 waves. You see what I mean? In a nest, you need to have 2 5 waves completed. Wave 1 needs to be in 5. Wave 3 needs to be in 5. You can have right here a high, breaking the high and not being in 5 waves. A high create what we call a bullet sequence, right? A nest is a nest. It's a bullet sequence, but it becomes a nest. A high doesn't have to be a nest. A nest is a bullet sequence. It has both the bullet sequence and the nest and things. And yes, the nest needs to have the divergence design. So let's start the context now. Everyone understand the basis. Any question about what I have explained, please ask it now. Any question about what we have covered, please ask it now. You can ask it now. No question, right? No question. All right. Now, World Indices, where we were before. What is a flutter? A flutter is a repetition of the same over and over again, right? A market is a repetition of the same pattern of 5 weeks over and over again. That's what it is, a flutter, right? A repetition of 5 weeks over and over again. You guys understand? Now, where we were before the war. My gosh, the war is coming to the end. My gosh, this is going to be a grand super cycle crash. Run and run. Run and run. Now, let me show you some charts right here. Right? For example, this is Delta airline. This is Delta airline. This is 8.7. Delta airline 8.7. How many ways do you see in Delta from here up to here? How many ways do you see right here in Delta? In the blue degree, how many? How many? How many wicks? Clearly 5 wicks, right? Clearly 5 wicks, right there, right? So when you look at delta, and the war didn't have started, the war started around here, around February, the end of February. What do you think that delta there is telling you? Is telling you, right? What do you think that delta is telling you there? Delta is sending you a warning at that stage. Delta right there is sending you a warning. A warning that is saying, aha, I got delta line showing me 5 waves. As a waiver, you need to say, I gotta be careful, guys, because the Elliott wave theory say that after 5 weeks, some sort of a pullback is coming, right? Some sort of a pullback is coming, right? That's what delta it is telling you right there, right? Everyone? So eventually, you have to use the market, right? Eventually, you have to use the market correlation. You have to use the market correlation in order to be able to understand where you are. So we knew in delta, we knew, but here that the market, it was automatically entering a phase in which a pullback across the market might be soon taking place, because the nature that from April the 4th to around the beginning of February, right here, delta was showing clearly 5 weeks. So because of that, we knew right there, because of that, we knew right there what is coming. And then listen how we were laboring. We knew delta already. This is, he took the highest on February the 6th, right? And when we look at the S&P that we were showing right here, look, this is February the 21st, right? Right? And you, I'm not saying that we peak in the peak, Diego. I'm saying to you guys that when you see the 5 weeks in delta, and when you see the 5 weeks in the S&P from April the 4th, this is the charge to members on February the 21st. The war hasn't broken there yet, right? We wasn't calling a nest on the indices. We were calling that soon we're gonna get a putback. Everyone see my point? That soon we're gonna get a putback, right? You see my point? So delta first, right here, it took the highs first. It's telling me, Eric, you got 5 weeks in delta from April the 4th. You gotta be careful. Don't be super bullish. You gotta be careful. When this reaction happened in delta, or around the 20, these people give up. And because these people give up, the cycle complete. That's why we were not calling here a nest in the S&P. So our members, and they know that, they were expecting on February the 28th, a little more 21st, a little more upside in the indices. But in our yearly report in Elliott Wave forecast, we were expecting at one moment, we were expecting there that the market correct the cycle from April the 7th as sometimes in 2026, sometimes this year. We were expecting the pullback, right? The warning happened in every single time frame, not in a specific time frame. I got another question in relation to this, that if I'm reading correctly, the question is that by Davey, that is this wave 4 still can, if this can be wave 4, I'm assuming that correct, that's the question, David, that you're asking? That's the question that you're asking, right? No, that's not the wave 4. Based on Elliott Wave, yes, you can call it wave 4 because it hasn't break the beginning of wave 2. But that's not the wave 4. And this is something that I hope you guys understand. Elliott Wave theory, the Elliott Wave theory was developed back on 1930s. We are a century later. You cannot apply Elliott Wave the same way that it was back in 1930s. Many professional servers are still doing that. Many professional servers are still doing that, and that is completely wrong. These people give up when delta was over here. Consequently, this cycle ended. If you look at the S&P, right? This correction here, this pullback that already take place on the S&P has nothing to do with this cycle. So what Delta was calling the S&P peak over here on February the 20, on correct January the 28th. Delta on January the 28th was already lower. It was still on the highs. I don't recall exactly the peak on the S&P, but the pivots give out in the cycles. And our system, our proprietary system, was calling the peak back then. So this is the S&P on February the 28th. We were expecting the pullback. This is the S&P to members on March the 28th, a month later. What we were saying, the cycle aimed. At that stage, the S&P was in the buying area. At that stage, Delta was in the buying area. Right? So, the message is, the war had nothing to do with the market. The war is a way to justify, yeah, the war is real, but the people that makes the market, no Diego, no Eric, no AG, no Berto, no Nicola, we don't make the market. The people that move the market use the war to justify what was about to happen. Many of you guys will disagree with me. And it's a free war still. If you want to disagree with me, you are entitled to. Personally, I look at the market this way. Personally, I don't look at fundamental. I look at the war as a justification to create oscillations in the market, to justify market oscillations. I do recall back in 2008, the financial crisis, right? It's not based in just one stock. I'm just using one stock. Then there were many stocks, many indices. It's not just one stock. The S&P, by then, David, it was showing clearly 5 waves. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 swing. The S&P was also mature than then. What I use delta is because delta show 5 waves based on the S&P. The S&P is 500 stocks, and it was showing 5 waves, right? The S&P and the market goes out, you need to open your mind, because the people that make the market makes it goes out. There is no many reasons. There's only one reason. Is that people that make the market move the market to whatever they want to move the market. And by nature, people enter the market and people exit the market. The one that matters, the 1% that makes the market, not the 91% that trade the market. Right? Think about that way, and you're going to become the better trader. Right? Now, that was the S&P, but then expecting the pullback. The war justified the pullback. I did that chart. I did the chart. It's perfect, David. And I swear to God, I don't know a single ounce of fundamental trade. With the years, I understand what CPI means. I know what it means. I don't know technically what it is. How come I can be so perfect? Because I know the market nature. I know the market nature. I don't follow Fox Business, CNBC. I don't follow those things. I follow the market nature. Right? I will answer your question. Adrian, ask me that question 20 minutes from now. Right? So, for me, it was clear where we were before the war. We were expecting a pullback. Is that clear? David, AJ, Adrian, everyone. It's clear. The proof is here. We were expecting a pullback. Yes or no? It's very clear, right? We were expecting a pullback. I didn't know, to be honest with you guys, I was in the Maldives when the war started. And people start calling me. I didn't get scared or anything. My team handled it. Yeah, we were expecting a pullback. Right? We were expecting a pullback. That's what we were expecting. A pullback. Right? For example, let me show you some. I want to make you guys a believer. Let me show you something. This is Elliott Wave forecast, yearly forecast. And now we're going to go into the future. This is the yearly forecast. Let me download it so I can zoom in. Right? And the news, all they do, guys, also is make you guys scared. The news scared the retail traders for entering the market. I hope you guys learned that. Now, look, this is the yearly forecast. This was presented to members on January 16, 2026. Let me see. This is the chart of the Dow Jones Industrial. Right? That was printed on January 14, 2000. Let me see. January 14 of 2026. You want to see the current chart? Look at the current chart. You go here. This is the proof that nothing, that the market people needs to take money. Right? This is the current chart. On the Dow Jones. What level say here? Around 50,000, you're expecting a pullback. Now look. Let me see what I have it. I have so many things open. And I lost track already. 1 second. So many windows. One second. That I lost track. Let me open it again. Look, around 50. There is a reason why we put in the chart, David, 5633. There is a reason, a mathematical reason, that that area should generate a pullback. Look at the market. It reached 5548 and the market pullback. One more proof, a proof, AJ, Adrian, Benjamin, we can say that we knew what was coming. I didn't know it was a war. I don't know if something happened. I don't know. We were expecting a pullback. So I hope that now everybody knows where we were before the war. Now it comes, everyone agree with me, right? Everyone understand that the market can be forecasted ahead of time using system. No, that level is base and extension in our system using sequences, using pivots and Elliott Wave, among other things. So the World Indices, where are we right now? Right now we are in a very interesting stage. In a very interesting stage. Right? And why? Because the market can be labeled many ways. And I'm going to use my good friend Nicolas because I know that he knows Elliott Wave pretty well. Right? so he can interact with me. Nicolas, this count in the S&P is valid or no? Right? What is the count? You go 2000, 2009 put back, the COVID right here, 2022, 2025. There is no overlap here and here. 1, 2, then 1, 2, 3, 4, 5. Wave 3 in the S&P might have happened already. Wave 3 of 3. So the S&P might be ending wave 3 in black with a 4 and a 5. Correct? So that's the beauty, the most natural count in the S&P. Swing wise, 1, 2, 1, 2. I don't think so, David. No. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11 swing. Everyone see the 11 swing, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11. When I see 11, I got a question which is a valid question. Can the Great Depression be 1 or 2? No. First, the S&P didn't exist in 2000 and 1929. Let's start with it. In the Dow, yes. In the S&P didn't exist in 2000 and 1929, David. Let's start with it. And why no? Is because many stocks, let's be realistic, guys. Anyone here knows what is animal spirit as a human being? Everyone knows what is, you know what animal spirit is, David? Nicola? Everyone? Right? The human being always is gonna be greed. That was greed. That's why greed is good. Right? Right. In 1929, I guess it was the beginning of the automobile industry. It's an industrial revolution. A lot of things happening that create an advance after before 1929. Then the market crash comes the end of World War II, World War I, the market advanced. But the humans, there comes the stocks, the dog stocks. Then there comes there's always something that is gonna make what I have always said. And there was a moment that we were living in the cave. There was a moment that it took 3 months to come from England to New York. Now you can come from England to New York in 6 hours and even less. Right? That's called human spirit. That is called progress. These guys that is talking here, Eric, have never been bearish the index. And we're never gonna call a top in the index. And we're always gonna look the pullback in the indices as an opportunity to buy. I've been this way for 20 years. Always gonna, because now AI is gonna create another advance in the indices. Previously, it was Facebook, Nvidia, it was Google, it was all those tech companies, right? Now it's going to be AI, Chris. I know you know this. It's called animal spirit. It's called progress. That's why I do not understand why people love calling peaks in the indices. And they say, oh, 1929 is wave 2 in the indices. Oh, there is a wave 2 that happened in the 1800 in the indices. The 2009 is the wave 4 in the indices. The indices are peaking. You want to know my opinion, guys? Wrong, and continue to be wrong. Right? And advice as a professional trader that create probably, if not the biggest, together with the biggest Elliott Wave servers in the world. Never in your life be bullish risk. Never in your life be bearish the indices or commodities. For the history of humanity, the human beings always are bullish gold and silver. Always. Don't be bearish. It's a stupid being bearish indices, being bearish gold and silver. Right? I'm going to answer your question, Mauro. It's depend on who were you, it depends on who were you following back then. Right? Right? And I honestly, I give you my advice. If you follow us, that won't happen to you. Right? Now, because he say exactly in 2009, many people lose money. And I tell you the truth. I was calling the buys in the indices for all-time highs in here. And this is a flat in 2009, Mauro. You know the flat, right? It did a marginal high and put back. Our system would have been labeled like this, but our system would have called the flat right here. Our system first will have called the buy against these lows. And right here, our pivot system, it would have said that it was a flat because of the nature of a sever, of the new high here. We have never called the pullback like every way we was calling, remember, Nicola? To around 200 in the S&P. So, let's get back to the future, where we are now. Nicola, remember, he was around, and there are videos from myself calling the S&P to all-time highs in here. I started screaming because of the sequence to my members to buy the S&P here. Now, the S&P comes and it show you this count, a valid count, one that is bullish. Why is bullish? Because from 2009, the S&P is showing 11 swing. For 2008 low, 2009, my bad. 1, 2, 3, 4, 5, 6, 7, 8 is calling 11. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11. It cannot complete. It's super bullish. And this count is 11. It needs to do. It got 5 from here. Now it needs 5 from here. Already, I need 5 from here. So the S&P in the grand super cycle following this count needs to do at least 23 swing. Let me see. Let's count it. If you're going to put labels, gonna do this to finish wave 3 on red right there. Right there, it needs to finish first. It needs to finish wave 3 on red. When it finishes wave 3 on red, it needs to put back and at least makes another high. This is the most bearish I can get in the S&P. In other words, to complete 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 swing. Right? It's because at the end, you need to complete 1, 2, 3, 4, 5, 6, 7. It needs to do 8 and 9. Right? To complete 9 swing without counting the internals. Everyone see, right? 1, 2, 1, 2. It needs to do 3. It needs to finish this 3, and another 3 in blue right here. So the S&P needs at least 3 new highs with a deep pullback, with an oscillation. That's the most bearish count in the S&P if you understand Elliott Wave. You agree or no, Nicholas? That's the most bearish. Right? Believe me, Nicola has seminars and everything. He knows Elliott Wave. Now, the question now is, this is where we are, right? This is where we are. And the only way that you know where you are is not just following the S&P. It's following the market and looking at the market as a whole, right? So I'm going to throw you guys, I'm going to throw to my good friend Nicola. I'm going to show Nicolas this chart right here. This is the FTSE, right? This is the FTSE. What does the FTSE say? The FTSE, for those that doesn't know, is the index from UK. This is 2000, 2009, 2018, the COVID low, and the current market. There is 5 swings. But in the FTSE, there is 5 swings, but guess what? Swing number 3 is the shortest. What did I say before to you guys? That the swing number 3 can never be the shortest. Did I say that or no? So automatically the FTSE is nothing. It is an impulse, but not a regular impulse. D. No, it doesn't matter that 4 enter wave 1. It's that this swing is the shortest. So what the FTSE is telling me is the FTSE, it can be doing this. Because from here, you can see, not yet, soon it will make 5 waves. So the FTSE, yeah, the FTSE doesn't deny discount of the S&P. It's possible, right? It's possible, right, Nicola? But the FTSE is supporting. Let me rephrase. These are no wave. These are swings. This is no Elliott Wave labels. This is Elliott Wave labels. There is something that is called swing counts. There is something that is called Elliott Wave counts. Two different things. These are Elliott Wave labels on the FTSE. These are swing counts. Like in the S&P case here, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It needs to do 12, 13, 14, 15, 16, 17. Those are swing counts. 1, 2, 1, 2, 1, 2 is Elliott Wave labels. So the FTSE do not deny discount. Now, this is when it gets interesting, Nicola. This is the Dow Jones. Anyone there? What do you see on the Dow Jones out of your eyes? Like this. What do you see? In difference with the S&P. And this is one of the biggest gifts that the market is giving us. This is the Dow Jones. What do you guys see from your eyes there? Anything pop to your eyes there? Anything? No, besides that is nesting. Adrian, you nailed it, what I was looking at. You nailed it. Adrian is completely correct. Adrian say this. Adrian say overlapping since 2020. And bingo, that is the biggest gift that the market is giving us today. That together with copper. That together with copper is the biggest gift that the market is giving us. Why? Because the Dow Jones cannot be labeled so beautiful like this. It cannot be labeled this way. Right? It cannot be labeled this way. So, the only way that you can label the Dow Jones is 1, 1, 2, 1, 2. Either this next scenario or you ending another nest over here. Sorry, my bad. You ending another nest over here because overlap here and overlap here. There is no separation. A wave 3 of 3, which is this case on the S&P, your wave 3 of 3 cannot overlap. Never. So the Dow Jones do not support discount in the S&P. Does that make my point? Does that make my point? Now, you need to have an amazing degree of the market. You need to have an amazing degree of the understanding of the market in order to draw this conclusion. If you just follow the S&P, you will never going to be able to see what I just explained to you guys. If you don't count the swings, you will never going to be able to see what I just explained to you guys. Can you explain what it means overlap, you say, on wave 3? A wave 3 of the market. What is wave 3 here in cycle? It's this way, right? It's this way, Diego. Right? Wave 4 cannot overlap, never. And wave 3, the top of wave 1. Wave 4 cannot overlap. You can get overlap in wave 1 and in wave 5 of the holding pores. In other words, you can get overlap in a leading diagonal. You can get overlap in an ending diagonal. But wave 3 can never see an overlap. You follow me? Now you understand it, everyone? But that is what the Dow Jones is saying to you. Right? Why the Dow do not support the structure of the S&P already passing Elliott Wave, the wave 3 of 3? Because of the overlap. Because if there was separation between here and here, or even if there was separation between here and I cannot put that this is wave 3 in black. I cannot put that. Why? Because it violates one of the rules of Elliott Wave. That the wave 4, 3 main rules on Elliott Wave. Wave 2 cannot pass the beginning of wave 1. Wave 4 cannot overlap wave 1. And wave 3 cannot be the shortest. And the Dow Jones overlapping here deny the Elliott Wave count in which we are already past the biggest acceleration of the market. Everyone? Everyone understand? I hope you guys understand it. Honestly. I hope, Mauro, you understand it, my friend. Everyone. So, that's going to leave you two things. First, there is no reason to be bearish the indices. Zero. And you should be buying any dip in the indices that they produce. I only see two viable counts in the indices. Only two. The obvious, which is the super nest, 1, 2, 1, 2, 1, 2, a quadruplet nest, Nicola, or a count, right? The S&P needs to nest in order to match with the Dow. Because you can play with the S&P whatever you want. Right? Right? You can play the S&P, Diego, in discount or discount. No question, no issue. Right? Or you call a nest. Now, Now, you got two choices. No question that from 2022, the S&P now is showing 5 weeks from 2022 with the new highs here. And that's also the killer of every waiver. That every time that you see 5, you're going to become bearish. So we understand the grand super cycle. It cannot be 5 weeks ending, any weeks. It cannot be a regular impulse anywhere. It has to be a nest. Yes or no? It has to be a nest. Diego, Benjamin, everyone. Now, let's concentrate now in 2022. From 2022, it's either a nest or ending 2022. Right? Believe me, I bet my house that is nothing else other than this one. There is nothing else than other than this one. Right? Nothing else. Right? Nothing else than that. It's either a super nest or it's ending 2022. No, those are the only two. That's it. Those two. Nothing else. When our members, there are some of our members that they're here. When the market was here, I was screaming to them in the live sessions. Buy the indices. Two things can happen, I said by then. Either we go to new highs or react and trade lower. And I can say this. The biggest acceleration the market have ever seen is going to happen in the next few years or on the next year. Right? So the market either is ending 2022 or is nesting and it's going to explode to the upside. As a waiver, when I see this vertical reaction here, you guys maybe don't see it. My eyes see it. Look at the angle. Look at the angle. Look at the angle. What happens in March the 30 is the most stronger squeeze that we are ever seen since 2009. Look at the angle, very vertical. This is more vertical than this is, and this is more vertical than this. More vertical than this. Yes or no? Those are things that someone professionally can observe how vertical this is compared to the. Think about it. For degree of vertical, the most vertical, the second most. This one was little choppy. This one, you can say that is getting more vertical by degrees, right? That is getting more vertical by degrees, right? No, but everything starts, Chris, with a lesser degree. That's the thing, right? It might be the case. I mean, I need to get back in the chart to 1992, but you see my point, right? That is very vertical, David, compared to previous upside. I cannot hide it any longer. Everyone knows that we pushing. Everyone knows that we pushing the nest to our members. We calling the nest. Yeah, look, very strong right there. Very strong, yes. Good eyes there. So, what I want you guys what I want you guys to understand is the following. That is the following. That you have two possible Elliott Wave counts. You got two possible Elliott Wave counts. Either the conservative, either you ending now wave one at the top, or you entering the biggest acceleration ever seen in the market, right? Everyone? Everyone understand? Either way, it's gonna be nest. It's gonna be either way is nesting. Either way is nesting. Either in a triple nest, no, in a quadruple nest. 1, 2, 1, 2, 2, 1, 3, 3. A quadruple nest when we finishing the 4 nest, or a more bullish version right there. But I've been saying that, Chris, for how long? Right? Right? I've been saying this forever. Right? If this market breaks about March 26, you mean about this peak, David? No, no, if it breaks these lows, doesn't say nothing, to be honest with you, because it still can be in wave 2, but it still can be in wave 2. You see what I mean? Not necessarily saying nothing. It can be both scenario. The 6 nest, but in order to be the nest from 2022, it needs to break the high. So it's clear that the market is not crashing. It's clear that either for the rest of this year, next year, we're going to see the biggest advance ever, or maybe a little bit later. There is no invalidation. There is no invalidation. No invalidation. The Dow Jones can be labeled only two ways. Either bullish against this low, or against these lows. That's it. There is nothing else. So, what I want to point out is, of course, you guys didn't saw our live session, most of you guys, when the market was pulling back right here. David was in my seminars. AJ, I believe, wasn't in my seminars. Most of you guys were not in my seminars. Right? You guys were not in my seminars. And what I was saying, Igor, if you can share, I was saying, buy the indices without feel. Buy the indices without feel. And right now, I can say that you need to attack the market against the last significant low. Sometimes the market play games, yeah, but you have to buy against these lows. We know feel, right? Right? We know feel. Right? We know feel. Because otherwise, you might be losing it. You might be lose the opportunity to enter the market. You should become a member, AJ. Just kidding, but you should. I know, I remember you. So, the market is getting back to this. The market is, where are we now? We are finishing, most likely, the first leg of the biggest acceleration with 80% degree. We are finishing the first leg. And I want to ask you, I want to tell you something. I want to tell you guys something. There is never an absolute view. There will never gonna be an absolute view on Elliott Wave on the market. When the market was here, I repeat, Ego can say that he was there. When the market was here, I was saying buying. I was pointing to two paths. I was saying, and recorders are there. I was saying, buy the green path. At that moment, I say, or the black path. I was calling it that way. The green path or the black path. Because in Elliott Wave forecast, we know the market nature. I say, it's going to bounce. It's going to bounce. Regardless, Don't be afraid. Buy it. I was saying that, right? I was saying it's going to bounce regardless. Don't be afraid. Right now, it's very simple. Right now, it's like this. But we, in Elliott Wave forecast, you were never going to see, because I'm the founder, the CEO, and the co-owner of Elliott Wave forecast. You were never going to see a chart of Elliott Wave forecast with an alternative label. And you, because I don't play games. For me, it's either black and white, winning or misery. And if I play games to you guys in my charts, and what do you think that we do a live session starting at 6:30 in the morning until 2 p.m. New York time every day? Because we explain the market like this to our members, right? So, but we don't put alternative labels. Why? Because human he has the animal spirit that also has feel. And as a leader, I need to tell you, this is what I believe, and that's it. If we're wrong, and when the market was dropping, I told our members, buy. We know feel. In my group one session, for example, look at NASDAQ. I was using NASDAQ, but then I said a floor to buy the market. Look at NASDAQ. It reached our buying area, new highs. Look at Meta and grew 3. It's not like I'm making the chart. The proof is there. For example, so I believe, honestly, that this market is complete manipulated by the market makers. And we understand we don't make the market. We don't pretend to be God or have the Holy Grail, but we know how the market works. Look at this beauty. That's Meta. You want to see Meta now? Look at Meta now. Do you think it's casualty, everyone? It is no casualty. This is knowledge. This is understanding the market nature. Nicola, we didn't have the blue boxes back then when you were here. We didn't have that. Look at Meta. Do you think that it reacted there because of casualty? No. And how do we know ahead of time from where to enter the market? It's because we break the market code. We know the cycle that is running, the possible Elliott Wave path. We know the sequences. We know the swing counts. And we know how to put it. And we know how to use the Fibonacci extension. That's key, knowing how to use it. No secret, it's the 100% extension. But you need to know how to use it based on the market nature. Right? And that's no casualty. The big money, the smart market was buying when we were telling to buy. The proof is there. So, I mean, at the end, what is coming next, where we are now, is in definition of where we're going next. Is the market needs to define, in my opinion, either correcting 22 or either the beginning of the acceleration. I've been asked to comment on the S&P, and that's a great post or the great question. I'm going to use my good friend Nicola. And Nicola, contact me later if you can. You got, and things, remember, no more Skype. Has to be in things. In Elliott Wave, when wave 3 is descended, in Elliott Wave, when wave 3 is descended, the RSI, the wave 3 of 3, in other words, I haven't showed the RSI. It needs to go this way. This acceleration needs to have in every single time frame, Adrian. And this is the grand super cycle. You agree, right? This is the grand super cycle. Right? It cannot show divergency here. This is the monthly chart. Look. What do you think? What do you think? Do you think that I didn't know that? Of course I know that. It's the nest, guys. It's the brutal nest, which is correcting it, which is this nest, right? Is this nest or it is this nest? In other words, it's no discount. Let's be honest. Right? It's no discount. Right? Join us, AJ. I want to see you. I think you was a member once, right? It's either. We got it. I'm going to show you guys something. It's either. The market is either one or the two counts. It's either a quadruple nest when we ended the four nest. I'm going to put the color only. Forget about the degrees and details. It's either a quadruple nest or it's either discount or it is discount, nothing else. And that is what is, and that's the reasons behind our view. Of course, that we have, remember, I need to protect our membership copyrights. They know already which instruments and how we can determine before our pivot system. For a start, the Dow Jones hasn't break the highs yet. So the Dow Jones cannot be correct in 2022. Right? The start. But our members already know, at least in group 1, which instrument validate 1. And when the more aggressive view become switched, and what needs to happen for the more aggressive view to switch to the less aggressive view. Christopher, watch today's session. We explain it there. But this is what Elliott Wave forecast is, guys. This level of analysis. I challenge you guys. Show me. This is how comfortable and confident I am, Chris. Show me an analyst, not part of Elliott Wave forecast, or being part of Elliott Wave forecast in the past that's playing the market this way. And I give you 6 months free of membership. Show me. Nobody in this planet. Nobody. No, we aren't going to show something that is not part of the seminar as a respect of our members. Sorry, D. Join us. Now, any question, and if you guys want to join us, guys, we got a 14-day trials for just $99, 99 cents. And now we have a flash sale, my gosh, I've been talking since 11, sorry. A flash sale, right? Request me, Nicola, if you have time, which it has a discount on the plan for the first month, I guess. Join us, D. You're going to get this analysis. Everyone knows where we were before the war, when we were during the war, and where we are now, and what's coming next. Any question about what we have covered here? Any question? Can we expect retracement of more than 50% after the wave in a typical wave 3 of 3? If it's this count, which is my favorite count because it's the more aggressive count with the obvious, right? Most likely, the only chance that you have to get a 50 back is when the cycle from March 30 ends, right? How you doing, Greg? Long time no see you. Right? A lot of old members here. Guys, if you are an old member and want to get back, I'm going to put my third in the line. Go to the homepage telling that I told you guys to give you a sweet deal. I saw Greg here. I saw AJ, all these people. See you tomorrow, Chris. How do I determine the routing cycle on the RSI? It's a system I cannot share, sign public, because I'm giving away our. You cannot go to Coca-Cola and tell them to tell you how to do code, right? There are things I cannot display here. Sorry. I hope you understand. In my regret, well, I'm going to answer your question. Yeah, what you mentioned there in mind. Wave 4 can retrace more. I mean, wave 4 in wave 3, what it cannot do is overlap wave 1 and wave 3. But wave 4 can retrace, and wave 1, wave 3, and wave 5, 50%, yes. It's a beauty. Meta is a beauty. We use after hours in our analysis, yes. If S5 is expecting to go up through nesting wave 3, I don't understand what you mean, Benjamin. Greg, go to the home page. Tell him that I tell you to give you a discount. You're a good member. You used to be a very good member. I enjoy being around. Right? So, Benjamin, I don't understand your question. Wave 5 needs to count with RSI divergency. Yes, it needs to count with RSI divergency. Unless it's an extended wave 5. right? Right? Benjamin, last question. What do you explain? I don't understand. I don't understand your question. If the S&P go out from now, yeah, there will be a moment that wave 3 ends. Right? I don't use nothing as a neo wave or anything. No. Like I say, I repeat, our system is Elliott Wave, Elliott Wave, a Elliott Wave pivot system, RSI, stochastic RSI, a stochastic RSI, a correlation, swing count, sequence. It's a bunch of things more than Elliott Wave, but no neo wave. No. Last question that I'm going to ask, they're asking, let me see. Yeah, this is a good question. And like I say, I'm very, you remember Birch, or hard to pronounce your name, but I think it's BISHT. Are you a member? All right. This is how it works. This is how it works. Right? This is how it works. We always go for the blue boxes, right? Like in Facebook or Meta, like in Nasdaq, like in the S&P. We always go for the blue boxes. Always. Doesn't necessarily mean that they're going to reach the blue box. Or nothing necessarily means that the correction is going to reach our target. For example, you mentioned silver. Yes. For example, silver on 329, we got gold, but then that it touched our blue box here and higher. We are long gold from here. But at the same time, we were expecting silver right here, a little bit lower. It never reached the blue box. It never reached the blue box. We cannot control that. Right? You see my point? We are not perfect. We don't pretend to be God. We don't pretend that everything that we say is going to be And the market is, no. We are at the mercy of the market makers. Right? I hope you guys understand. But we did 158% return to our members in our live trading analysis last year. There is a reason. Right? Based on the blue boxes. No every entry is reached. No every correction target is going to be reached. No, that's not the way it works. Last is the last question, is the relationship between oil and the indices. Elliott Wave is the same in every market, D. Now, our system is even better in every market because our system works. And you told me I can forecast the market without putting a label. I just put a label so people understand. People understand what we are trying to explain. Now, last is the relationship between oil and the indices. This is oil. (2008). What has been oil? How has been oil behaved since 2008? Bullish, sideways, or bearish? One of the three. Any guess? Bullish, sideways, or bearish? Sideways, right? Very good. This is 2000. How oil did in 2000. Bullish, bearish, right? Bullish. Now, we understand that this is bullish, this is sideways. How does the S&P went from 2000 to 2009? Bullish, bearish, or sideways? Sideways. And how does the S&P has been since 2008 and 9? Bullish. Conclusion. Both cannot be rallying at the same time. Correct? Yes or no? In the overall trend. It cannot. So that's my answer, guys. Oil gonna continue sideways if the indices enter the wave 303. That's all for today, guys. I hope you guys enjoy it. I hope you guys all have the answer about everything. And the conclusion is very clear. Indices remain supported. Oil looks to be catch up with the indices down the road. However, and I mention oil because the war is creating a buzz around oil. So oil will be sideways. If the indices go into the wave 303, oil is going to go to 50, 40. If the indices going to go and correct 2022, oil is going to nest onto the indices higher. Right? Our views are inside our members area. I won't mention any view about any individual instrument as a respect to our members. We give you two options. Join us here, 14 days, 99 cents, or you can take the flash sale and save $30, 30% in every paid membership. Right? Thank you for having all here. I hope you guys enjoy it. Thank you guys. So all members, get back to Elliott Wave forecast. We can offer you a very nice discount. Thank you guys all.